Buckle up, folks. The U.S. economy just flexed its muscles with a stronger-than-expected rebound in the second quarter, proving it's far from down for the count. If you're wondering how this powerhouse of a nation bounced back so impressively, stick around. We're about to dive into the details that could reshape your view on economic resilience. And this is the part most people miss. These revisions aren't just numbers. They reveal hidden stories about trade wars and spending habits that might surprise you. Washington, the U.S. economy's recovery in the second quarter has been revised upward once more, and experts are predicting that this strong momentum likely persisted into the third quarter, highlighting the remarkable durability of the world's biggest economic engine. For those new to this, gross domestic product, GDP, is essentially the total value of all goods and services produced within a country's borders over a specific period. Think of it as the ultimate scorecard for economic health. According to the Commerce Department's latest and final estimate released on Thursday, GDP climbed at an annualized rate of 3.8% from April through June. To break that down simply, an annualized rate means projecting the quarterly growth over a full year. So this figure suggests the economy expanded by 3.8% if that pace held steady for 12 months. That's a notable jump from the 3.3% reported in the second estimate, and a solid leap above the initial 3% figure, showing how economists refine their calculations as more data comes in. A common process that helps paint a clearer picture of what's really happening. What powered this impressive comeback? A drop in imports and Americans' unwavering commitment to spending played key roles, helping to offset an earlier slowdown. Picture this. At the start of the year, the economy contracted because importers rushed to build up their stockpiles in anticipation of President Donald Trump's tariffs on imported goods. These tariffs, designed to protect domestic industries, ended up subtracting from GDP by increasing costs and disrupting supply chains. But here's where it gets controversial. While some argue these trade policies were a necessary shield against unfair foreign competition, others see them as a self-inflicted wound that slowed growth and raised prices for everyday consumers. Did the tariffs ultimately hurt more than they helped, or was the contraction just a temporary hiccup? It's a debate that's divided economists and policymakers alike. What do you think? Looking ahead, the Federal Reserve Bank of Atlanta's projections suggest GDP kept surging at a healthy clip during the third quarter. For context, this means the economy might have maintained its vigor through July, August, and September, potentially driven by continued consumer confidence and business investments. The government's initial estimate for third-quarter GDP is set to drop next month, so stay tuned for more updates as this story unfolds. This piece is still developing and will be updated as new information emerges. What are your thoughts on this economic bounce back? Do you believe the U.S. is on a sustainable path to prosperity, or are there underlying issues like trade tensions that could derail it? Share your opinions in the comments. Let's discuss.